one of the questions I get asked all the time is how much money do I need to get started investing in the stock market? And the simple answer is there is no minimum. Like you can start putting as little as $5 into the stock market. Hopefully you can do more than that, but if you can't, just starting that mindset of saving and contributing on a monthly basis is going to be helpful for you long term. And then the second question is how much do you need to trade options? And I'm going to go ahead and say like a minimum $1,000, but even that, like you're still going to have some hard times doing it because trading with a smaller account is much more difficult. So if you're trying to do options with a smaller account, you kind of only have three options available to you, like what you can do. One of those first ones is buying out of the money calls and puts. People call these like YOLOs or lottery tickets. The idea being that they cost so little that if you're right, you can make a huge return. An example of that would be on Tesla. If you only had about $200 in your account, you can buy a call that's out of the money, strike price 12.10 that expires this week for $198. And if Tesla gets up to say 12.15, that contract would be worth $500. So you make $300 profit off your $200 investment. So that's pretty awesome and that's very enticing. But the issue being is that your chances of this going in the money is very slim. So sure, you might win one or two of these and make a huge return, but if this is the only strategy that you have, you're going to be giving it right back as you try to replicate the results. Uh, just by clicking on the option here, even in Robinhood, you can see the Greeks, and the delta would kind of tell you the percent chance of it being in the money. So this delta is 5 or 0.05, which equates to 5%. Take it multiply by 100. So there's a 5% chance of this finishing in the money, which means 95 times out of 100, you're going to lose if you put on this trade. I don't like those odds. I hope you don't, but if you do, go ahead. And what entices people to do this is the huge returns. Like if Tesla just goes up, your expected profit just goes through the roof quickly. But you only have like a 5% chance according to the delta, which the delta, although doesn't take everything into account, a lot of people can base their strategies based off the delta. So it's something that you should at least look at and know how to use. The second option that you guys have to you is to trade spreads, and that'll let you lower your delta or get a higher percent chance of winning. So say I'm still bullish on Tesla, but I have like $300 in my account. I can do a spread, and what a spread is when you buy or sell a contract, and then you do the opposite, like one step up that's further out of the money. So an example in this case on Tesla, I could buy the 1050 call, and that'll cost me 3,100, but I can go ahead and sell the one above it for 2,800. And if you look, the total cost is 252, so $252 because you multiply this by 100. And down here you can see your expected profit and loss. Like your max loss is capped at 250, and then your max profit is 247. And that's because once it blows past this, you're not gonna be making any more money. You reach your max profit once your upper strike or you're further out of the money call or put and gets breached. That's when you kind of cap out on your profits. So with this strategy, you improve your chances of each play going up. But again, if you're wrong, you're losing that whole $250. If that's your entire account size, then congratulations, you just reset your account if you can only contribute $250 a month. So it's just something to think about here. Your percent chance of winning on this one, let's pull up the delta. Delta is 51, so your percent chance of it being in the money, 49% chance of it being a profitable trade. So basically a coin flip to double your money. Do you like those odds? Maybe, maybe not. I like them better than the 5% chance, but again, this is not a strategy that I think can be repeatable nonstop. And that's kind of the issue with having a smaller account is that you only have a couple plays that you can put on, and your whole account is at risk. Uh, Something that might be a little safer would be selling a put spread. So you have theta working in your favor. Although if you're doing it on a stock like Tesla, that's probably not going to mean too much based on how much Tesla moves. But an example of doing this would be doing the put. So Tesla's at 1046 instead. Maybe we sell the 30 delta-ish. Let's find where that is. Let's go a little further. 1015. All right, sure. We'll say this one. So we could sell this guy, and then we buy the one further out. And again, we're creating that spread. Now, this one has a higher chance of winning. So this guy, the delta is 31. So your percent chance of winning is about 69%. And the difference is on this one, your max profit is only 155, but your max loss is 345. So you don't have that 1-to-1, double your money kind of thing. You're risking more to gain a little bit less, but your percent chance of winning is up. So it's just kind of another version of the spread that you can do if you think Tesla's going to go up. In this example, Tesla can go down all the way down to your short strike of 10.15, and you'd still make profit. So that's your other option. Option number 3 is just save more money. Like, contribute to your brokerage account, maybe put it in some market funds if you want to. But while you're building your account so that you can start doing options, use the paper trading features and go and practice trading. Develop your strategy before you start trading. And then that way, when you do have, say, $1,000, $2,000 in your account, you are more familiar with what you're actually going to be doing. So you're not just throwing a dart at a dartboard and hoping for the best. So I'll be the first to say that trading with a small account presents a lot more challenges. On any particular play, you can lose a majority of your account in just one play, and so then you're taken out of the game pretty quickly. And you just have to be very careful about what plays you choose. Be very picky on what positions you enter. I'm actually thinking about starting a challenge account with Webull. I'll put $1,000 in and see what I can do with it. And I expect it to be a failure because I'm used to trading with a larger account. I can make mistakes and have money to turn around and fix them. But with an account challenge like this, it'll be a lot harder to do because once you lose it, you're out. And that's kind of how that challenge is going to work. So stay tuned and we'll see if I put that on. And if you like this, go ahead and subscribe so that you can follow that if it happens.